Welcome back to Java. Thank you kindly for joining me. It's December 8th, 2025, Monday morning. After a relatively calm weekend, I hope everyone enjoyed their weekend. Now we're going to talk a little bit about the Fed going into print mode, as well as a couple of other surrounds that are going on affecting what we're seeing today. So let's get started with what's going on in the markets. Our fear greed meter at 40 is increasing toward the greed level slowly. This is retailers buying in and pushing this up. So let's look at the factors behind that. 10-year yield is going up, money flowing out of the bond and debt market and going into equities and other assets, such as Bitcoin, as well as gold. Now, price of gold down slightly, but not a lot. So cryptocurrencies up, Bitcoin above the 92,000 level and has a bit more strength to run from here. The outlier is the relative strength of the dollar, or the DXY, is dropping. So with the dollar getting weaker, this inflation coming into play means prices going up. That includes equities, cryptocurrencies, and other real assets in a general whole. So at this point in time, it looks like the markets are going to open in the green. Futures are looking a bit weak. So I believe this is going to be a slow, steady pace. We are looking at possible Santa Claus rally. Now, I'll talk a little bit about the factors of that in a moment. Gold is holding above 42,000, and silver, I believe, is going to make another run at the $60 mark. May not get through quite yet, but we'll see on Wednesday will be a big factor for those two. Now, we are in what we call the debasement trade. The debaser is the weakening of the relative strength of the dollar. Volatility index right now is very low. So, in short, if we see the volatility index spike a bit, that is going to be great for traders, but it is going to be very rocky. Now, Wednesday, we are expecting the Fed to cut rates 1/4 point. They're in a divide about this because this is, in short, the battle of the argument is inflation versus the weak economy and job market, which is extremely weak, a lot more so than what they're letting out in the news. So our economic outlook is not very strong. They are coming out with an additional $12 billion package for farmers. In particular, they're also looking at the pricing of beef, as well as, in retrospect, what happened with the soybean farmers. So that $12 billion, as it filters through, again, will be inflationary. So it's just a question of when it hits. And they're talking about the new Fed chair. Now, we can either get slow inflation that continues for a longer period of time, or massive inflation all at once. And if they choose Hassett, it looks like it would be much more inflation, much more rapidly. So we'll see what happens with that. One other thing I would like to point out, and this is a very quiet story in the background, but they're talking about the BIS, that's the Bank of International Settlements. This is the banking of the banks. So, central bank body, they are raising concerns of gold and stocks in a double bubble now. They're raising the concern on this because people are going to real assets instead of their fiat currencies, and they don't really like that. So, with all of this inflation, people going into places where they can hold their wealth, and that is not the point. They do not want you holding real assets and maintaining your wealth. Now, Wednesday, look at the calendar, nothing today. Again, Wednesday, the Fed rate cut. We'll get all of the action. They make the announcement at 2 o'clock, but really the market starts moving at 2:30 when Powell starts talking. So we've got job openings on Tuesday. That could be a possible opener. Everything else will be hinging on this rate cut, and then Thursday. So if they do anything other than that 1/4 point, could really move markets. Otherwise, it's already priced in. So stocks could go a bit more, of course, but this Fed cut of 25 points is already priced in. Now, I want to shift to a couple of other things that could be possible with the cold gray swans, whatever. India. Now, as we speak about Japan, and the yen carry trade. Now, India doesn't have a massive carry trade because of the interest rates, but what they've got is a trade imbalance and then also manufacturing. So this could also be an issue, even though it wouldn't be as rapid of a crash for the US markets. The rupee, Indian rupee, is having issues. So if their central bank has to cover for this, they could take some actions that we really do need to watch as far as the global markets as well. So I just want to bring that up because I'm not seeing very much of that anywhere as well. And they do have quite a bit of power, even though it's not as much as that yen carry trade, still very significant. We've got the firm that called 2025 nearly perfectly until a moment of doubt now has highest S&P 500 target on Wall Street. The chart of this, stock market going up. That is not because proper valuations. It's not based on production and it is not based on earnings. So again, this is just a different version of the debasement trade. So the problem with this is as they're cheering on all of these stocks going up in price, they're not seeing in the underlying. There is nothing underneath of it. So it's creating what we call air gaps. And when it creates these air gaps within these markets, that just means it could fall much more rapidly and deeper when that time comes. So another warning flag, if you will. Now, Fed meeting this week, they're talking about whether investors would get new all-time highs or call for Christmas. I believe it's going to be a little bit more of an all-time high, but not as much of the spike as they're putting out there. I do believe we're in for a bit of the Santa rally as the portfolios are being rearranged to look like these companies, hedge funds, and the likes are all invested in these larger, more beautiful companies, if you will, the Mag 7 and the likes. So they like to show their clients that they're in all of the newest, greatest stocks, if you will. Now, Goldman Sachs want to point this out. They're pinning hopes on these consumers, again in air quotes, in 2026, and here are the stock picks. Now, in short, United States consumer, the largest in the world, the lower end consumer obviously is not purchasing stocks, they're not purchasing goods. So what we're looking at is two sectors now with this K-shaped economy and then the upper class. So at this moment, we've still got a bit of a residual middle class. Now, the lower class, if you will, people own debt. They are reliant on government subsidies and they cannot survive without government funding of some sort, whether it's through the EBT, food programs, and the likes. They do not have 401ks, they do not have savings. Now, the second section of this population that they're all pinning their hopes on, so to speak, is what's left of the middle class. Now, the middle class has 401ks and they are reliant on what we call the wealth effect. So, this what is left of the middle class is spending as long as they believe that their home has a particular value and as long as they believe that their 401k has a particular value because they don't own many other assets. Those that own gold, silver, real assets are reserved for the upper class. So we've got the serious divide going on, and we're going to watch that going forward. Now, one last thing I wanted to bring up is apparently we've got a large CME, which stands for coronal mass ejection, from the sun heading towards planet Earth, supposed to hit sometime in this evening to tomorrow morning. So if you're anywhere near the north, you should be able to see northern lights if you have clear skies. Also, that is a slight bit of a warning for this. It does cause the radiation and will affect your electronics. So with all of this, wish you all a wonderful evening. Hope you can see the aurora. Keep your electronics protected. And until I see you again, my friends, resist.